My name is Glenn Tompkins, senior instructor here at VectorVest. When I first started here, I knew nothing about the stock market, and everything that I've learned from VectorVest, but I'm not on CNBC or MSNBC because I'm not that good. So I'm good, but I ain't that good. How about that? Does that make sense? I'm asking you, Todd.
Roll with it, yeah.
Okay, there you go.
You're good, Glenn.
But and I'm comfortable in my own self knowing that what I've learned from the VectorVest software has done extremely well for me from a financial standpoint. All right, so that's what I do. You'll hear a lot of me on webcasts and on Trending Thursday, which will be live again on YouTube tomorrow. I will be for Trending Thursday. Oh man, no, it's no Brian, it's no Go Patriots, no. And Jay says, Glenn, you're okay. All right, put him in timeout, Joey. Thank you very much. All right, all right. Keeping all that in mind, the stocks that I used, LPG, a shipping stock. For me, I wanted to do more of what was going on in from a search perspective, hot stocks. We look at hot stocks, we give them to you every night in the VectorVest software. So one was a hot stock, one was a heart stock. All right, you'll understand what I mean that in a second. One was a hot stock, one was a heart stock. All right, so LPG, which is a shipping company, and if everybody out there who knows me, what's my favorite stock in the whole wide world? Apple. There is my heart stock. And again, we'll talk about it. So those are my two stocks. I'm looking at Apple. And even though I love Apple, I'm not in love with Apple. Okay, number one. Number two, there's a right and a wrong time to be in Apple. Looking at all of the stocks in this list with the exception of EIDX. Good Gordon Gin there, David.
It's for the adventure.
It's hard as part of the adventure.
Not for the faint of heart.
That is not for the faint of heart. For the longer term investor, a lot of you will say, well, wait a minute. Apple won't even outperform a AAA corporate bond. We'll talk about that. It's a good, safe stock still. And the stock is still in an uptrend. Look at the CI. The stock still has a good comfort index. Something else that you might not like. Look at the earnings growth. They are growing their earnings at a little bit negative, and it's the only, it's three stocks. Mine is one of three stocks that has a negative earnings growth, but they do have an earnings of $12.92. Guess what? They got the most in earnings. Probably, though, it's because they have the highest price on this list as well. My earnings yield sitting at 4.92. They pay a dividend, and guess what? The dividend safety is at 0.9, is at 92. They still have a higher probability, really, Jay? They really have they have a high probability of maintaining or growing their dividend, all right? So there's a couple of things that I don't like about it, and as I mentioned, it is more of a heart play than a hot play. Let's go to the graphs. Let's go to LPG, shippers. Now, a couple of things that I look at a little differently. I'm in more of that swing trade type of scenario. So on my graph, I'm looking at a 20-day exponential moving average. Look at that. For the most part, it serves as a good level of support riding that stock's price up. What is the stock doing right now? A little bit of consolidation. But look at earnings. Even, and this is again, I love that David Paul brought this up. Stock is consolidating. What's the earnings doing? Earnings are still rising. High probability that the stock price should continue to high. And think about this. These are stocks for the new year. What you're looking at are stocks and that are going to have a high probability of still rising going into the new year. When we look at earnings per share, and we didn't talk about this, especially to the new people, our earnings per share is forecasted earnings per share. So what I'm saying on LPG, the earnings by this time next year should be higher than $2. That gives me a good opportunity to know that if earnings is the engine that drives the stock's price higher, projecting earnings higher than what it is right now is a good play. Stocks, if earnings is the engine that drives the stock's price higher, rising earnings, high probability the stock's price is going to keep moving up. Bottom left, top right, very little interjections below. I just wanted to use that. That came from Schoolhouse Rock. Interjections. Anyway, all right. So back and forth. I know I just spiraled off a little bit. That's the life of being around.
Pull it
me.
back. Pull it back, Glenn.
But for the most part, staying above that 20-day exponential moving average. And again, look at that big money. David said has the wherewithal to know coming off of that level of support or that level of that 20-day moving average. Look at what happened. And there you go again, Tom. Well, this is not on support and resistance, but bouncing off a level of a moving average. Look at that run. So what I'm looking for as a get-in price, about 12 cents higher than the high. About 12 cents higher than the high. That helps to ensure that I'm buying into a rising stock. Everything else is there that I need. The earnings per share is running up. Let's go put on support and resistance real quick. I didn't change the colors. I'm not going to. Looking at that, there's the last level of support. Every time a stock hits a new high, it automatically creates a level of resistance. So we're at one level of resistance. I'd like to see 12 cents higher than that level of resistance. Tom still even types it in the room. All right, Tom, love you, Tom. I love you to death. All right. Earnings earlier this year was negative. They're doing something right. Think about that. They've now gone from negative earnings to positive earnings. There's a good change in the culture in the company. The stock's price is moving higher. Earnings is good. So that is my first stock. And it's in the transportation shipping industry. When the shippers move, they move. When the shippers don't, they don't. And they sink. But even with that being said, notice that this shipping company has not had a lot of pullback. Think about that. Not a lot of volatility. I can't say that for a lot of other shipping companies, right? A lot of shipping companies have been sandblasted with volatility. This has not. So in the shipping space, this may be a really good choice to take, especially knowing that it's a little bit more resilient even when the industry gets beaten up. So keep your eye on that stock. Anybody?
Interesting your decision to buy the higher high. Now we have the regression trade, right? You've kissed the 20, right? So you're very close to the high. It wasn't that strong a pullback. So buying the high in this case, maybe okay, right? But in previous examples of that, previous iterations of the pullback, right? You're looking for that explosive price move, or at least the strong price move back up off of that low, not necessarily waiting for the higher high. Right? In other words, you can get an earlier entry depending on how much pullback there was in the price action itself.
And
not a lot of pullback in the history of this 6-month graph.
I will agree with what you said about the shipping companies without that volatility. That is not what you're used to seeing in
Right.
this type of stock. So I do like that about it.
And Jay put up TNK. Jay, I'm not going to put it up on the graph, but look at that graph compared to LPG. Tell me which one you like better. Think about it from that perspective. Even if you look at TNK or you look at dry ships, which is no longer around, they dried up. They're out of business. All right. Anybody else? Nope. All right. So this is my, not hot play, but my heart play. Apple, in case you didn't know, Apple just recently hit historically new highs. Overall, this stock is just, for me, it's amazing because I own everything Apple. So
What do they do again?
don't start with me. They make the best.
Fruit packers, I think, right?
No, they're not food packers. They make the best devices in the world. And again, that's me being extremely biased. All right, I got Apple everything. And I still own my first Apple phone from 2007 when they first came on the scene. So this is, has it not been susceptible to downturns in the market? It has. I'm looking at a 10-year graph. Look at over 10 years, how many times the stock has been a sell? Very little compared to the stock being a buy or a hold. Look at the equity curve from the bottom left to the upper right. Hitting historically new highs. Let's go put this on a 1-year graph. Now, you look at that and go, good Gordon, Jim, look at that earnings. Well, it is what it is. Earnings got hit back in earlier this year. Earnings got hit, but now earnings is back on the rise. Now, the reason why I call this a heart play, because did it look as good as a lot of the other stocks that were brought up on the panel today? The answer to that question is no. But what I do like, even with the falling earnings per share, what's the stock's price doing? And even with the most recent time period, as the stock is moving sideways, what's earnings per share doing? Apple is a name that ain't going away no time soon. I know that it's been adversely affected by the tariffs. All right? It is adversely affected by the tariffs. So I'm going to keep that in mind. If I put this now onto a 6-month graph, where am I looking at? Well, the stock, this 20-day exponential moving average, if you get in when it goes above, it does a really good job keeping you in and keeping you from panicking when it pulls back. Panicking when it pulls back. When it does go below the 20-day exponential moving average, that's probably a good opportunity to get out. But look at this. For the most part, it does, that 20-day does a really good job of keeping you in that stock without panicking. What's happening today? The stock's price is coming up above the 20. So a couple of ways to enter this. Could I get in early knowing that the stock's price just went back above the 20? Yes, because it seems like every time it does, the stock's price tends to pull higher. Number two, let me take off support and resistance. Number two, should I wait until it goes above the all-time high? You could, because that's creating a beautiful level of resistance, right? That's not what I wanted. That's creating a beautiful level of resistance. So maybe you say to yourself, let's wait till the stock's price goes above that level of resistance, which is at 268. We're only $6 away. Or if you want to get in a little bit more aggressively, knowing that historically that 20-day exponential moving average has done a really good job getting you in and keeping you in, even when the stock's price moves, man, that 20-day is good. It is so good. And today, we're breaking above. If you want more confirmation, maybe you wait to see if tomorrow, if we continue to be above. But over the last 3 months, earnings pretty even though we saw on the longer term graph, the stock's earnings per share have pulled back. It's getting back to where it was about 3 months ago. And I like it. So yes, this is more of a heart play, but if you look at the stock ain't going nowhere. It just is not. All right? I know David might have had a little something that you wanted to say about that.
Well,
Yeah,
yes,
he's going to put some worms in your apple.
Wow.
I rode that move up the page very nicely. There's a gap right at the start of that move in September or something that I got in on. But I sold mine on Monday. It was a spread bet at the London leverage player. I was 5x leveraged, so I got out of it Monday. And I should have phoned you because we could have done a deal and saved the spread.
But you know, interestingly enough, look at that. The stock's price did close, even though it was an open candle, the stock's price did close below that 20-day exponential moving average. So you know something? I'm not far behind in saying, could I have gotten out there? I would have pocketed a good little piece of change. And now, what is the name of the game? To buy low and sell high. Who's to say that this is not the new low as the stock continues to move higher? So I could have gotten out, taken my money. Yeah, I would have gotten in at a lot higher price, number one. Well, number two, let's back up a little bit. Let's say this is a long-term holding. I like Jim's idea. Apple is a stock that I know is going to be around. When this happens, what could I do? Sell a covered call. And stay in a stock like Apple over the last 5 years, still moving from the bottom left to the upper right. Still being able to hold it during this time without taking on the full brunt of the pullback of the stock, sell the covered call, and that way you help to offset some of this this downward move. Look at that, above the 20, back below, above, and since about this time, above the 20 and still rocking and rolling. Still rocking and rolling. I like that the 20-day exponential does a good job keeping you in a stock like Apple.
Yeah, and like with any of these, I would just comment on, what's your, depending on the time frame you're looking at, if you put it on a 3 or 6 month graph or an intraday graph, it's still going to be what's your objective? Are you swing trading it? Are you putting it in a retirement portfolio? Are you buying and holding?
So it all depends on what time period you're looking
at.
at.
Macro thing.
Right.
You're going to do that on whatever you're
Before
doing.
you define the trend, you have to define the time frame.
Well, yeah,
You've got to know
Where,
exactly.
am I swinging
what's
it?
my
Am I
objective.
trading it? Am I putting it in my long-term holdings? And going back in time, looking at a graph like Jim would look at, a 5-year graph, helps you to know, do I want to hold this long-term? Looking at a 3 to 6 month graph will let me know, do I want to swing trade it? Putting it on an intraday graph over the last few days will let me know if I want to trade it. So it all is time frame.
Yeah, there's no right or wrong, as long as you know what your objective is, and that's what you're analyzing as you look at it. That's
Yeah, the graph
But
is
that goes for
telling
all
you,
of them, you know,
it's definitely fallen out of growth phase, right? So a lot of that price bump, and you follow the ecosystem better than I do, but the latest changes to that ecosystem are the resurgence or refocusing on Apple TV and their streaming services, right? So
Yeah.
how much of that price action is a bet on that re-energizing some growth? Well, there's a technical side of the trade of just trade the price action and let's move on. From an investor standpoint, well, if you like the dividend and it's yielding well and you think it's relatively safe with that flat earnings action, right, then you can make that decision for yourself.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.